Canada is sitting on one of the largest housing bubbles of all time. And that isn't something that I just made up. That's something that even the mainstream media, if you can believe it, are now finally talking about. So Canada is sitting on one of the largest housing bubbles of all time. An analyst says, what happens if it bursts? So this is going to be incredibly interesting. We've got so much data as well. An analyst who describes Canada as sitting on one of the largest housing bubbles of all time warns that if it bursts, the country would be thrown into a deeper recession than forecasted. So think about it. He's saying a deeper recession than forecasted. We know a significant recession is forecasted because of the yield curve. We don't need to look at economists in the mainstream to realize that. We can look at the yield curve, and that could be exactly what the yield curve is predicting. I mean, think about the housing dependence in Canada, over 40% of the economy. So this leads into a self-reinforcing doom loop, like I said on previous videos. So essentially, the yield curve is what is predicting that this is going to be the worst recession since the 1990s. Now, the 1990s recession was the worst recession. You can only find a recession that was worse than that, and it was the Great Depression. So the 1990s recession was a severe, prolonged recession. In fact, if you look at the Canadian Encyclopedia, it shows you, and I'll show you as well, that it is in fact the longest as well. So if you look at the Canadian Encyclopedia, you can see the 1990s recession had significant contractions for a long period of time, and longer than in the early 80s as well. Because if you look at the recession by definition, how long it lasted, you can see here I've highlighted March 1990 to May 1992, so over 2 years. The only recession that was longer is the Great Depression from April 1929 to February 1933. And think about that, because most people actually say the Great Depression only really ended when World War II started, which was way after 1933. So that shows you how bad things can actually be whilst they say, oh, we're not in a recession anymore. And we saw the same thing back in 2008, 2009, because if you look at a place like the US that was hit bad by 2008 and 2009, you know, they were stagnating for 5, 6, 7 years. Real estate took a long time to bottom out. It took 5, 6 years to bottom out, in fact, from the peak in 2006. So it's kind of crazy when you really think about what's going on here. Colmar argues that those looking for a big headline about a housing bubble should be keeping an eye on the disparity between house prices and incomes. And we've talked about this several times as well. You only have to look at this chart to realize how far one has got away from the other. So house prices, the red line just going parabolic, and then you've got incomes not really doing anything at all. And you can see here that really we haven't had a prolonged recession since the early 90s, and housing took a big hit there, and it went down for a long time and didn't start recovering until pretty much 10 years later. So, you know, that goes to show you how bad it can really be. And could it just really be that Canada, in fact, has longer housing cycles than most countries? It could possibly be. And that could be, in fact, due to the banking monopolies that we have here in Canada. He warns that decades of low interest rates in Canada seduced a lot of home buyers and has led to excessive leverage backing up the system. And that is true. The low interest rates are largely to blame for what's happened here, and especially after 2008, because if you think about it, interest rates should have never gone as low as they did. In fact, we know that inflation is highly manipulated by the government, and if it was more accurate, we would have never seen interest rates held so low for so long. So the fact that inflation is so manipulated by the government distorts monetary policy. It makes it wrong. So even, you know, if you believe the Bank of Canada is in bed with the government, even if they were trying to act independently, the fact that they get their data from the government and that is heavily manipulated means that they are going to make the wrong decision. So it's kind of crazy when you really think about how this all goes back to the government and the manipulation that's been going on there since 1992. But how leveraged are Canadian homeowners? Colmar says it's significantly north of where the US was before the 2008 crash. Canada kind of is really off the charts in that front. And he's not wrong. Again, when you go back to this affordability, it is just completely off the charts when you look at how far home prices have ran away from incomes. And, you know, as the bubble bubble churns onwards, in order for the banks to continue making that bubble go further and further and further, they have to take more and more risk. And that's why they've extended more and more credit. They've allowed people to use their homes as ATMs to go and buy investment properties and do all these other things. Really, you just see the risk that the bank's willing to take on go up and up and up. And we really saw the apex of that in 2021, 2022, and even to a certain extent this year, because you can still see the blind mania going on in places like Calgary, where banks are willing to lend at the same rate to somebody who's just moved here, way more likely to lose their job as somebody who's been living here for years and had the same job. So that goes to show you how broken banks are at pricing risk. And they even know about how the Alberta economy is up and down, and they've been burnt in the past for it, but they still just do not care. So it just goes to show how the lending standards have gone down and down and down over time. More subprime. You've been able to fill that with immigrants. Not just immigrants, there's been a ton of Canadians. We've seen polls that have come out, 40, 50% of Canadians willing to commit mortgage fraud. So it's not just immigrants, but the fact that immigrants don't understand or know the system means they're liable to get took advantage of by people who just want to exploit them for monetary gain, like these corrupt mortgage brokers that have become rife in the immigrant community. So it's just unfortunate, and that's just the way it has been, and it's not going to lead to a good thing. So with the yield curve this inverted, as you can see on this chart, the data on TradingView doesn't go this far back all the way to the 90s, but this has got way more inverted even since they came out with this chart last year. And if you look at what's happened through prior recessions, you can really understand that the yield curve is a good predictor. So you basically had the yield curve slightly invert in the dot-com bubble, it's slightly inverted in the GFC, and then if you look at what happened in 2019, it also inverted. And we haven't seen an inversion like this, like Bloomberg sees, since the 1990s. So what is going on here, and what is an inverted yield curve? Well, essentially a 2-year government bond is paying 4.7% and a 10-year government bond is paying 3.7%. So in what world does it make sense that the government bond, which is longer duration, is priced way less than the government bond that is short duration? Obviously, if you're taking more time in terms of risk, then you need to be compensated that in the form of a yield. But the fact is, you're not being compensated by that in the bond market, hence the yield curve inversion. And why is that? It's because moving into the future, guess what? The banks, the major players in the bond market, are betting on the economy going down, not up. So think about it. The guys that orchestrated this thing through their rampant lending and just taking on unbelievable amounts of risk are the same guys that are betting on the economy going down. And this is really the insider tip that we have, is the yield curve. If you want an insight into the banking system and what large pools of money are doing, then look no further than the bond market. Do not look at the stock market as an indicator. That is a horrific indicator of what's happening. I mean, some of the bank stocks in the US hit all-time high literally a month before the global financial crisis and Lehman went bankrupt. So that shows you what a useless indicator the stock market really is for the overall economy, or what's even going on in a particular sector. So the thing is, when you look at this, it's kind of crazy. And then you're starting to see people are actually starting to sell their properties, especially investors. Investors are really starting to sell. So I just want to show you this real quick. So if you go down, it's really this chart that I want to show you. So you can see the average condo prices are going down, and they've been going consistently down. So you had that spring market, and then they've wiped it out in literally a couple of months. So the market is going down, and this is a good thing for looking at investors, because investors, they love condos. So if you look as well at sales, you can see they're kind of slightly up, but it's doing nothing to stop prices because of what's happening with supply. Condo owners looking to sell no longer expect bidding wars as new listings spill into the market, tipping conditions into balanced territory where buyers have more negotiating power and choice. And for those who bought at the February 2022 peak and now have to sell, they are taking heavy financial hits as the average price for condos in the GTA has dropped by around $100,000. So think about that for a second. They are having to sell at a loss. How how long are they going to be able to do that before the price goes down to a point that they can't even afford that? It might have even got to that point already. And then who is holding all the risk? It's all the banks and the financial institutions, as we went over on Monday's live stream. If you haven't seen that, I'll link it at the end. So it's kind of crazy. And it's not just in Toronto where you're seeing problems, particularly problems in the underlying housing market. Might not mean prices are coming down. Calgary price is still at all-time high, but it's incredibly interesting when you look at some of the stories you're starting to hear in this housing market. So Jason Young, the Toronto native, had moved to Calgary with his family for a more affordable lifestyle and bought 3 properties, one of which he lives in with his family whilst the others are rented out. One property, he said, was bought during the winter when rates were crazy low with a variable rate mortgage. The bank stretched the amortization out for a crazy number of years just to keep my payments the same, he said. Then they contacted me again this summer saying I have money owing on that property now because the rates are so much higher. So think about that. People are being hit, and this is Calgary, market that is at all-time high right now. With last winter's rates, Young's monthly payment on the property was $900. Now he says the amount has increased by almost 50% to $1,400, but I haven't paid it. So I have money owing to the bank on that house, he said. If the situation continues, Young's plan is to let the debt add on, and once the 5-year mortgage term expires, sell the house and pay off what he owes. So think about how that can keep a market going down. If you have the market turn right now, like let's just say hypothetically it turns and prices start falling from here, and then he goes to refinance in 2, 3, 4 years when his mortgage is renewing and the price has gone down, the guy is screwed, and then he is heading into foreclosure with a lot of the other people. So you can see how the market can go down for a very long time because of all the effects of people holding on to stuff. And it really gets into the emotion if you look at what he says here, because he says Lou isn't looking at selling his property anytime soon, but knows several others who are. I have a lot of friends who have properties and a lot of them are thinking about selling. Think about what that means for the market right now, because in Calgary especially, you've got a distorted market. The inventory is really, really low. And yes, prices are rising. I would actually expect they would rise a lot faster considering the sales. So that tells you something about how good the market actually is. But what's going to happen when there's loads of inventory? Or what's going to happen when there's an explosion of inventory? Because right now, Calgary's pulling demand from the future. So it's kind of crazy, the dynamic that's going on. Maybe it's going to be an opportunity for people if they want to move to Calgary and invest in Calgary real estate at some point. But right now, it seems like a really risky situation. So anyway, he also says he works as an assistant broker with Hope Street, a Calgary-based property management team that assists homeowners with managing their properties. We have a significant pool of non-resident owners, he said, many of who are deciding to sell their properties. Usually we would have 2 or 3 non-resident sales a year. Now we're looking at 20 to 30. So people are trying to get out of the market. It's actually getting bad. And you know, people don't want to sell, but the fact is eventually they might be forced to sell. So a lot of people are holding off right now. They're kind of paralyzed by what's happened with interest rates. And really, it's just a waiting game, in my opinion, because people are waiting for better times. It's sort of like they're almost betting on better times when we know the labor market is falling apart. We know we're in a recession right now, and we know things are only going to get worse from here. We're not even at the bottom of this. The government hasn't even come out and said we're in a recession yet. So a lot of people are just paralyzed and they're in fear, essentially, frozen on what to do. So it's interesting what's happening, but in the higher price markets, you're certainly seeing the selling pressure start to emerge in the areas where investors are. And there is a lot of investors in Calgary too. And think about that. They said in this article, a lot of people are thinking about selling. Yeah, thinking about selling until things start correcting, and then everyone wants to sell. Because that's always the way it goes. When prices are rising, everyone wants to buy because the FOMO. But when prices are going down, you get that fear, you get that capitulation. So I think it's really interesting, the dynamic that we're seeing in the housing market right now, and it's going to be so interesting to see what happens moving forward, especially in markets like Calgary. If you've enjoyed this video, you might like this video here, you might like this playlist here. If you're looking for a VPN to skirt Bill C11, then look no further than the VPN that I use, ExpressVPN. Go to expressvpn.com/market mania. Thank you so much for watching, and I will see you in the next one. Take care, guys.